Good morning, everyone. Welcome to our webinar, Due Diligence for Academy Trusts. So I'm Pam Tuckett, Head of Education at Bishop Fleming. I'm joined today by a great team of really experienced presenters. So we've teamed up with VWV and we're joined by Chloe Brunton, who's going to give us an overview of what's happening in the sector. Matthew Walton, who's going to look at the commercial aspects of looking at a transaction in the sector. Robin Ranjanan, who's going to look at the pitfalls around looking at property through due diligence. And then from Bishop Fleming, we've got Phil Redgate, who's going to cover a few of the war stories, which I know you'll all be really interested in to find out the things that we've seen that can go wrong. And Alistair Campbell, who will wrap up with a review of the role of the Audit Committee and the wider trustee group. Now, as usual, we've got a question and answer session at the end, so please do put your questions to the presenters. You should hopefully have a Q&A box. You can post them anonymously, but obviously if you'd like to leave your name, that'd be great too. We'll try and answer as many of the questions as we possibly can. We may not get to all of them live, but we will answer all of them and we'll be circulating all of our answers after the webinar's finished. And we'll also share any sort of helpful resources that we refer to with you as well. And just to remind you that the webinar is being recorded. Now, as we know, the sector is responsible for literally billions of pounds worth of public money, assets and income. So the stakes are really high for trustees, and it does mean that you've really got to get this right. We're seeing more and more issues arise from transactions that are causing financial loss to trusts when they take on a school. And the trustees have actually got a real duty of care to make sure that each transaction is looked at really carefully and that everything is identified properly. So our presenters today are going to give you some tips to consider when you undertake your next transaction. I'm now going to hand over to Chloe, who's going to give us a little bit of an oversight of what's happening in the sector and why this is such an important topic for us to be looking at right now. So over to you, Chloe. Thank you.
Many thanks, Pam. So good morning, everybody. So before we get into the sort of nitty-gritty of the kind of questions that we might ask and the particular pitfalls, we thought it sensible to pause and just think about that wider political context and why you might actually be approaching a due diligence or DD exercise, as it's often referred to. So ultimately, we carry out DD because the nature of the collaboration we're exploring with another party is one where the risks associated with that school are potentially going to become our problem. And also because those risks might impact on any current schools that we might be responsible for. There will also be cases where you're handing over your school to another trust and you just want to be confident that you've made the right choice and that you haven't sent the school off into a black hole financially or morally. And the trustees have got clear duties in this regard when it comes to managing assets and risk. And Alice is going to talk about specifically how the trustees engage with the DD process a bit later on in the session. But as an overarching principle, we carry out due diligence because we want to make sure that the venture we're embarking on is ultimately going to be a success. So each of you will come at this from a different perspective and potentially with different types of transactions in mind. And that context in itself will necessarily inform the type of DD that you're carrying out and what leverage you might have with the other party or with a third party like the DFE when you identify a particular risk or a liability. And Matthew's going to talk about the importance of the timing of your DD in order to potentially maximise that protection for your trust. So some of you might be within MATs, you might be looking at growth, perhaps through converting schools or through taking on a rebrokered academy, for example. And in some cases, the trust might know the relevant school very well. You might already have developed a strong relationship. And in other cases, it could actually be a hostile rebrokerage, for example, where your access to information and the premises more generally is a lot more restricted. You might be an academy trust that's looking at a merger with another academy trust. And increasingly, we're seeing mergers of MATs. These are of all sizes. And you might also be a single academy trust or a SAT, which is thinking of joining with another trust, for example. So what's clear is that DfE policy is going to drive an increase in conversions and transfers over the coming months. So earlier this year, Gavin Williamson outlined a raft of policies targeting the conversions of schools and the growth of MATs. He said that the DfE's vision is for every school to be part of a family of schools in a strong multi-academy trust. He's claimed that single schools are no longer viable, vowing to shift England's pick and mix education system towards a single model based around MATs. And so it seems very likely that there will be an increase in pressure on the maintained sector and those in single academy trusts to join formally within a MAT arrangement. So the precise nature of that pressure is yet to be determined, but we can expect further policies on this later this year, and it's likely that a white paper is on the way. With the suggestion of a fully academised model, many will think back to the 2016 white paper, which focused on forced academisation, which didn't go down very well. It's perhaps more likely that the proposals will focus on funding and incentives, with a continuation of the trust capacity funding being awarded to those MATs able to support in areas of lower performance. We've already seen a number of policies targeting the growth of MATs, most recently the Try Before You Buy scheme, where a maintained school or a SAT can enter into an arrangement with another trust to formalise their collaboration. It's actually just a service level agreement, and of course schools have been entering into these for years, but it is seen as a step towards schools formally joining within a MAT. So often an informal collaboration like this is the best way in which two parties can actually get to know each other. And if the MAT option or the marriage option is on the cards, it can of itself inform the due diligence exercise. So what better way to get to know a school or a trust than working with it day to day and experiencing its cultures and practices firsthand. So with that, I'm going to hand over to Phil, who's going to look at some practical cases of financial DD.
Thank you very much, Chloe. So good morning, everyone. My name is Phil Redgate. I'm a senior manager in the corporate finance team at Bishop Fleming, so lead on a lot of our financial due diligence engagements. I'm just going to quickly cover off the typical scenarios we work in, what that due diligence scope probably looks like, what we look at, and then, as Pam said, give you a few of the real world war stories, what's gone wrong, what might have been we have identified in due diligence, and examples of where due diligence hasn't been undertaken and what can go wrong in that scenario. So in terms of when we're doing this FDD, it's all those scenarios Chloe just mentioned, really. So we're acting for MATs, taking on single academies looking to join a MAT, or two MATs merging, and DD is relevant for all those parties in those scenarios. Our typical scope for due diligence on the financial side, we normally look at the budgets and forecasts. So that's in the context of historical performance and what are the underlying assumptions in there. It's really important to get under the bonnet of that and know what it is, what the school looks like moving forward, and how that impacts on the wider trust. We also look at the balance sheet, understanding the assets and the liabilities, what's there, what maybe isn't there, contingent liabilities, that kind of thing. And then we look at regularity points. So what is the control environment like at this school? How do they operate? And that really fits into the wider cultural piece as to what the management is, and will it fit, and will the marriage work as such. So onto some real world examples, that budgets and forecasts. This is an area where we do go into a lot of detail on the due diligence, really getting under those assumptions. The critical ones are obviously pupil numbers. So what will the pupil numbers be doing over the next 3 years? And there's lots of issues that could impact that and ultimately impact on the financial performance. We have seen scenarios where schools have joined a trust without due diligence, and then subsequently a local grammar school has increased its entry from 2 forms to 3 forms, and that's significantly impacted the pupil numbers of the school that's joined moving forward and put it into a deficit position. So understanding changes in demographics, changing in what competitor schools is really crucial, so you know what this performance will look like moving forward. Another key area to consider is then on the staff cost base. So changes in pay grading structure, all that kind of thing is key. We've seen instances where pension rate assumptions have been incorrect. So the pension rate changed in the last couple of years. The old rate was still being used, and that meant that the school joining the trust actually was in a hundreds of £1,000s deficit position rather than a surplus as had been expected. This wasn't picked up in the light touch DD that had been undertaken, but had a proper scope been applied, it would have been identified, and the trustees would have had a better view of the quality of the school that was being brought in. We also build in some integrated curriculum financial planning metrics when we're looking at due diligence, and these could be very detailed or sort of a higher level benchmarking exercise, but this is a good way to understand how the curriculum is operating at the school and how that flows into the wider finances. And we've in the past benchmarked the school that's joining to the multi-academy trust, so we can see how the two compare and whether there are any synergies that can be achieved as the school joins, whether that's sharing teaching assistants around the trust, combining classes, or sharing resources. It's really important, and again just builds up flavour of what the culture is like at the school that's joining, which is all important. On the regularity side, we've seen a lot of changes recently as in terms of income and the recognition criteria. So we know that recently pupil sports premium and catch-up premium can now be carried forward into the next financial year. There are lots of different regulations around the different income streams, so understanding what the criteria is around them is really important when we're looking at budgets and forecasts to assess what the financial performance is going to be. Likewise, on capital spend, the SCA and SIF capital expenditure grants, at the moment we're seeing a lot of issues with trusts being unable to find contractors and builders to actually complete the works that they planned. There are criteria on those income streams that if they're not spent by X date, they do have to be handed back. So it's something to be really alive to, especially at the moment with the challenges in the construction sector, as to what that looks like for the school that's joining and what the wider issues are. We've also seen a lot of ESFA loans recently. The struggling schools have had to get an emergency ESFA loan, and there's being pushed towards joining a multi-academy trust. So it's really key to understand what the terms of those loans are upfront before they join the trust. We recently had an example where they had an emergency loan, but it was clear from the cash flow modelling we'd done as part of the due diligence that that loan wasn't going to be affordable, repayable moving forward. So because that was identified up front, negotiations could be undertaken with the ESFA. It's much more difficult to negotiate after the merger is completed and once it's in the trust. So identifying things like that early on allow you to get that negotiation done and make sure the merger is on the best possible terms available. And then the last part on regularity is around related party transactions, something that is obviously a hot topic and can easily get in the press. So this is something we do go into detail on, look at what those transactions are they on an arm's length basis, and what's the nature of them. We recently did some due diligence where there are a lot of things going on with relatives of the head teacher involved in works for the school through their private businesses. We had the senior leadership team had set up a company and then dissolved it very quickly afterwards. And it wasn't quite clear why they'd done that, but it all sort of paints that picture and gives you a flavour for the culture of how the trust is operated and any changes that need to be implemented moving forward if the merger goes ahead. The next point to cover off on the horror stories, we've seen quite a few in connection with property and buildings. So this is where surveys haven't been undertaken before the merger, and subsequently there can be some pretty major issues arise. We have seen in the past, school joined a trust. 6 months later, the main school building was actually condemned over the summer holidays. I think the roof collapsed, and this meant that numerous porta cabins had to be rented at a cost of sort of £500,000 a year. So significant financial issues. Obviously, you've got the capex spend to replace that building, and this was where a survey hadn't been undertaken in advance. Sort of had a quick look around the site, but nothing in detail. So really important to understand those risks around the property. One thing to be aware of is that if it's a school transferring from a local authority, there is a duty on the local authority to hand over those buildings in a fit state. So it's really important they are handed over in a fit state, and you know that up front, because after the merger is completed, it's much more difficult to go back to the local authority to get any of those issues corrected and negotiate. You're in a much stronger negotiation position, knowing the issues up front and being able to deal with them. The last point really to mention on the due diligence is it just come back to that cultural fit piece. So we have seen numerous examples where from day dot the cultural fit hasn't been right. We had an example where there are two schools joined together to form a MAT. They never did anything jointly. They always had separate board meetings, separate accounting systems, reported their budgeting separately, management accounts separately, and it was never really integrated. No integration savings were made to really generate the benefit of joining a multi-academy trust, and ultimately that MAT has now applied to the RSC for a divorce. So it was a real failing from the outset. So that cultural piece is all critical. We've seen another one recently in due diligence where there were two schools joined. One of the schools was the lead and had the CEO and the CFO, and it just never generated the trust between the two schools. So the other school felt as a second party and didn't inform the CEO and CFO of numerous significant issues, including £1 million sat in a bank account that was concealed almost from them until the audit finalisation meeting. So that trust is obviously also separated, and the two schools have gone off from their separate ways. But it really highlights how important it is to get that cultural fit right and understand the issues from day one and make sure the merger is right for both parties. Otherwise, it can involve a lot of cost and effort at the other end to resolve and go their separate ways. So that's really it from me on the war stories part. We'll pick up on any Q&A at the end. But now I will hand over to Matthew to talk about some of the commercial and legal aspects.
Thank you, Phil. Oh, I seem to be coming through in there we go, that's better. So yes, my name's Matthew Walton. I'm a partner with VWV, and I'm going to be discussing today due diligence from a commercial lawyer's angle, but also trying to keep it in context with the wider strategic and cultural issues mentioned by Chloe and Phil before, which of course remain important and relevant. Like anything to do with schools, it always pays to keep an eye on the bigger picture and not just treat issues as being in silos. If there was one thing that I'd say today, it would be to start the due diligence process early. Hopefully you're here because you recognise the importance of the process, but leaving it to the last minute doesn't just increase the risk of missing things, it also leaves you with little or no time to address any problems that you uncover. And as I talk, you may hear this repeated once or more times. As Chloe discussed at the outset, due diligence is going to be different every time. Some trusts take it more seriously than others. In my experience, trusts that have had their fingers burnt previously will generally take it far more seriously than people that haven't. But it's also going to depend on the school that's joining you. And as Chloe said, it may be a friendly school next door. You know them, you know the people, you know the land, you know how they work, and it's all pretty much known to you. Or it could be that forced rebrokerage issue. Whereas, you know, because it's a forced rebrokerage, almost there are inherently going to be issues and problems there. But there may be an antagonistic view if they feel as though they're being forced to join you. So we may not have the sort of open and transparent approach that we'd like to think normally happens. One particular war story to note, and it happens on a relatively regular basis, is often the school business manager or finance individual at the school that is joining you sees their own position as being at risk when a school joins a multi-academy trust. And we've had several situations where very early on in the process, the school business manager has left, leaving no one there with day-to-day knowledge of what's going on. That obviously causes significant problems, results in the often reported story of, you know, we were going through a set of drawers and we opened something and we've just found this, how much trouble are we in? But again, the earlier you start the process, the more likely it is that you can get these things done before there are any changes or any departures. And the main issue from my perspective is that when you do this process early, you get time to sort out the issue and you get time to resolve the problems. The one thing that is definite is that someone has to take the liability if it's identified. The one thing that can't happen is that the liability somehow disappears. If you have an academy trust, a single academy trust that's joining a multi-academy trust, you can't leave anything with the old academy trust in the hope that it'll magically get written off. So someone has to take that risk. And in general, there are usually three options. And the first is that you, as the incoming academy trust, get to take it on. And the benefit of the due diligence exercise is that you know exactly what it is that you are taking on. The second is that you persuade the local authority to put money into the pot. And the third is that you can persuade the DFE to help. Now, the DFE have a default position, which is to say no, and I'm sure most of you here will recognise that. But they can be persuaded to help and assist, and sometimes it's about being slightly more creative than simply asking for money. So we've been involved in a situation where there was a financial issue, there was a financial shortfall that was effectively putting the transfer at risk. The DFE were unwilling to make a straightforward contribution. At that point, there was a lot of political pressure about the cost of rebrokerage, freedom of information requests going in, and the DFE didn't want to put something in straight up. but in an entirely unconnected situation, we were able to agree that another academy within the chain, which was growing, would be able to move to estimate-based funding for 3 years in order to improve that position. And miraculously, that smoothed things over and matters proceeded. There are other options, grants, etc., but they're less likely. But if none of the above work, of course, the nuclear option is not to proceed. And as Chloe mentioned, the trustees of your trust, if you're taking someone on, have a duty to not only under legal terms, but to also your existing schools, not to take on something that's going to cause a problem. And this is where the chair or the CEO, whoever is going to negotiate, really comes into their own and makes a difference. It's not easy to get a council or the DfE to do something they don't want to do, but of course the circumstances will be relevant. If your trust is the only option for a school that the RSC is desperate to rebroker, you're going to be in a strong position. You can really force the issue and hold it to ransom, really. If the school is well performing, no obvious pressures to convert or to move, it's going to be more difficult to get someone to do something. There are contracts involved. You'll be looking to take on contracts. It's important to do the due diligence to understand what it is you're going to be taking on, how expensive the contracts are, how long they're going to carry on. And you'll want to understand how you start merging and conforming those with your current structure and your current setup. Two most obvious ones are catering and IT. You know, you don't want to bring in a system that's not going to work with your current schools. So how can you engineer that? Hopefully, in a situation where the schools are working well together, you might be able to look at making changes before the school joins. From my perspective, one of the curious parts of the education sector is that contracts often have automatic rollovers in them. Something we don't normally see outside the education sector, but often schools join and it turns out that there's an IT contract that the new trust doesn't want, and if notice had been served 2 months before, it would have ended, but because it's automatically rolled over, it's gone into another 1, 2, 3 year term. So early identification means you can hopefully work with the existing school or trust to make changes. Phil mentioned buildings, and there's always going to be a balance when looking at buildings between doing, you know, obtrusive surveys. The lawyers and the building surveyors will always want the most detailed, the most obtrusive, the most intrusive surveys to be carried out. But we're talking here about schools, and often schools that are in the middle of term time. So there will always be that balance, and it will be a matter of skill and experience as to which buildings are going to be most at risk of having problems and which are relatively risk-free. It'll depend often it will depend on when buildings are constructed. And from a lawyer's perspective, there's generally potential protection for up to 12 years after the building has been constructed. So it's important to understand exactly what those rights may be, and also to make sure that those rights come across. So if there's a problem with a leaking roof, if there's a problem with a floor that comes up, you've got a right to go back against the builder and make sure that that they can come and fix it. Phil listed, or referred to a bad example. We've all got bad examples of where trusts have taken on schools without doing proper due diligence. My personal favourite, when a trust, before I got involved with them, I hasten to add, took on a building where the sports hall was under the water table. It was not a happy situation for them. On a more positive story, we had a school that was converting, and a survey went in and identified £900,000 of work that was needed before it became compliant. And because the trust was in a very strong position, it was realistically the only option for this school. The school was in desperate need of being moved and taken on. They played hardball. Conversion was delayed for 3 months, and in the end, the council stuck its hand in its pockets for £750,000 to make that. And as Phil said, if we'd taken on the school before that, there is absolutely no way the council would have put that level of money in. So that was a very good example of having done the due diligence early and then using that to negotiate a good position. Finally, I just want to touch on employment. Obviously, you need to know exactly who's going to be joining you, what their terms of employment are. And when you look at that and when you go through that, it could throw up various issues which need to be resolved and identified. One that I often deal with in multi-academy trusts, they have schools from different local authorities and different areas. There may be different pay scales and pay grades there. How are you going to integrate that? How are you going to make sure that everyone joins and it's a happy ship when they come in? It's also important to understand the difference between conversion and transfer in this area. If we're dealing with a community school that's converting and joining you, then the local authority, presumably, the local authority will, as the employer, remain liable for actions and events that happened prior to the conversion. If there's an issue, a claim, discrimination, or whatever, the local authority will indemnify you against those losses. However, if a school is joining from, say, a single academy trust, once that school joins, the previous employer will cease to exist, or at least cease to exist financially. So there is no one there to be responsible and to indemnify you if there was a discrimination claim arising before the conversion. That means the importance of the due diligence becomes even more relevant, because there's likely to be no one there to claim against. And finally, my personal war story here. We had a situation where a school joined and an individual within that school as a teacher wasn't part of the teacher's pension scheme. Now, they weren't part of the TPS because they had decided many years ago they didn't want to be. They were a part-time teacher. They became a full-time teacher. They were entitled to join. They said no. We had myriad emails and so on showing that they said no, they didn't want to be part of the teacher's pension scheme. It got to retirement and someone told them what the scenario was, and according to the rules, what should have happened is that they were enrolled in the teacher's pension scheme when they became entitled to be, and then came out afterwards. If they'd known that at the time, that's what they would have done. They didn't, and therefore the trust was left with a six-figure liability and no one to claim against. So again, the more due diligence you do, the more not only you will find out and identify in terms of problems, but also the more time it will give you to fix those problems and to come up with a solution. So hopefully, in a whistle-top tour, that shed some light on it. Hopefully you'll have some questions, but in the meantime, I shall pass you over to Robin.
Thanks, Matthew. My name is Robin Rajada. I'm a partner at VWV and I specialise in dealing with property issues for academies. So in this part of the session today, I'm just going to be talking through some key practical considerations around property due diligence. We've mentioned it before in the context of the other speakers, but the relevance of property due diligence is even more important in today's climate around the different contexts in which these transactions can take place. They can be forced mergers, they can be MAPs acquiring sites that they're not particularly comfortable with or familiar with, which means there is simply more to uncover within the site as part of a due diligence exercise. We've mentioned it again today, but it's especially the case with property. Timing of due diligence is crucial. School sites are large, searches and surveys take time, especially when the site is operational, and they take time for the results to be collated and for people to understand the results. Getting those surveys, carrying out the due diligence as early as possible, as Matthew has said, gives you more time to broker a solution and to be comfortable with the risks you're taking on in respect to the site. For example, you really don't want to be in the position where you have the building survey results coming up just before you're about to complete and they reveal significant repair issues that you need to resolve in already agreed documentation. The next thing I want to mention on property due diligence is title, really. The title to a site can be freehold, it can be leasehold, it can be held in a different way. The point I really want to make is that with regard to leasehold lands, and this is looking into the future really, that asset can be more difficult to deal with than, say, a freehold, where there are less restrictions in terms of how you can use the property, in terms of the works you can carry out, and in terms of whether you can let parts of that site out. Whilst you won't be able to change the position, you will be able to, armed with this knowledge after carrying out a due diligence exercise and establishing whether it's freehold or leasehold, be aware of the restrictions and therefore be able to manage the site more effectively going forward. With leasehold land, you also need to be aware of relationships. And when I'm talking about relationships, I'm talking about relationships with your landlord. It's not always a local authority. We've seen land leased from tire companies, dioceses, foundations and parish councils. Where a lease is not in a model form, which you will establish from a due diligence exercise, you need to be careful that that lease can be transferred to you. By way of example, we know that parish councils often meet infrequently, often in fractious Zoom meetings, and as a result of that, and often unbeknown to you, is that they do not execute documents as often as you might think. And this goes back to the timing point we mentioned before in terms of ensuring a smooth project. This point on title is more relevant to existing academies. In essence, where it's an existing academy, the title should be registered simply because there would have been most commonly a freehold transfer or a lease granted, which would have been registered at the land registry on conversion. So if you're acquiring an academy, existing academy, where the land isn't registered, that's a big clue to you that the property might be defective in terms of the documentation. There could be an issue with the negotiation of documents related to due diligence on a conversion project or elsewhere, which means that the site is held on perhaps temporary arrangements which have never been formalised, for example, a tenancy at will. A tenancy at will or other temporary documentation won't afford you security of occupation of that site. Recently, we've come across projects where long-term leases were never granted by the landowner and the school was occupying on informal arrangements for years. Now, there's several problems with this. One, that it doesn't give you any security of occupation, and two, it limits what you can do with that site. Can you make the alterations you want to? Can you underlet part of it? Probably not under short-term arrangements. In that case, we assisted the trust with the completion of the lease, but the complications of completing that lease, which weren't resolved on the initial conversion project, meant that the timescale for the project was negatively impacted. Again, keeping on the title theme, a title review is something we always do as part of a due diligence exercise, and it's important so that you understand that the rights the site benefits from, what it's subject to, and whether any restrictive covenants affect the site. Crucially, it will also confirm the extent of the legal boundary of the site, which you will then need to check against the actual boundary as understood on the ground. In terms of the rights a site benefits from, it's important in terms of access. It's also important in terms of services, and it can be particularly complex where you have two or more schools on a shared site, where there's shared classrooms, shared boilers, shared ICT equipment and cabling, and they all need careful consideration, and existing documentation needs to be reviewed to ensure that costs, liability and access to those things is appropriately shared out. In addition, where you're taking on an existing academy, you need to make sure that any payments relating to that shared responsibility have been paid up to date, so you're not facing an unpaid bill. Equally as important are restrictive covenants, and they can be revealed by a title review, and thinking strategically, they can hinder or prevent use of land for an alternative use. It is important when considering property DD to think strategically and be forward-looking to consider how a site can be adapted to better suit the MAT or the group in the future. We've come across restrictive covenants restricting parts of the site for caretakers' occupation, and when plans are made to change those caretakers' properties into general educational use, as well as planning consent, consideration needed to be given to that covenant. There are potential solutions around restrictive covenants in terms of insurance or asking the beneficiary for a release. In this circumstance, the covenant was released as the council, who were the beneficiary, were supportive of the proposed use. Others today have mentioned building surveys and their crucial importance, which I would absolutely agree with. They need to be commissioned early. The results need to be shared and understood. They will usually give you an idea of current repair issues at a site, and they will usually break down those repair issues into urgent, medium or long-term risks. Being forearmed with a survey early on in the process, like others has mentioned, gives you ammunition to have that negotiation around difficult repair problems with the site. Mated to this, I would also recommend that you go onto the site and have a look around and inspect it yourself. Whilst you can rely on the building survey in terms of repair issues, having a look at the site itself will tell you who's using it, when they're using it, and whether the buildings are new, whether the buildings are old, which all goes into the due diligence pot in assessing the viability and the risks associated with that site. Turning now to occupiers of school sites. School sites can be occupied by a broad range of different bodies and groups. As part of our due diligence package, we would always ask about occupiers of the site and the terms in which they occupy. The reason we do this is that so you know what rights you have under any occupational arrangement. For example, a lease might contain a service charge arrangement where a landlord is required to carry out services, or an obligation to keep an access or certain rooms clear at certain times of the day. If there's been a breach of these, this can be a potential risk item for you. As a result of looking into occupiers, you know who occupies what, and you know who occupies when and what rights they have. Related to this, you'll know how to bring these arrangements to an end and what rights any occupiers may have on expiry. You might have, thinking about it, strong, estate plans for that site, and there might be occupiers of that site preventing that plan from to be taken through fruition. Knowing when the arrangements come to an end and also how to bring them to an end is helpful when making those future plans. A particular story which comes to mind where we were involved was when we advised a client who acquired a site where there was a whole block of school land which was occupied by third-party businesses. Whilst that block generated income for the school, the plan was to bring this part of the site back into school use. So we were able to analyse the terms on which the occupiers occupied the building, put them on more consistent leases, which allowed the school to manage them more easily, and also factored in break clauses so that the school was able to bring floors of that particular property back into school use over time. Next, I wanted to mention searches, which you're probably all familiar with as part of acquiring property, probably your houses. There are a number of searches that we would always recommend, and also some which are based on the locality of the property, for example, mining searches, and also some which depend on what you intend to use the site for going forward. For example, if you have building projects in mind, you might be considering whether you carry out utility searches, which will tell you where the utilities run across the site, which can obviously impact on construction projects. Local authority searches are particularly useful in identifying whether all new buildings have appropriate planning and whether they've been signed off by the local authority as being completed. And also if the site has had planning issues or notices served by the local authority in the past. It can also tell you about the roads surrounding the site and whether they're adopted, and we can then cross-refer to the title of the site and the boundaries of the site to make sure there's no gaps, which could cause access problems. It would also tell you whether the site's affected by public footpaths, which can be an issue on playing fields. A drainage search is a search to tell you how the site drains. That's probably less of an issue for a site in a built-up urban area, but in more rural areas, we have come across sites where schools have had different private drainage arrangements, including septic tanks. And so this leads us to ask further questions around how often those arrangements have been maintained and inspected, with the implication being if they're old and not maintained, it could be a potential cost liability. Environmental searches we would also carry out. They are desktop searches rather than intrusive searches, but and go onto the school site, but they do look at historic planned land uses and whether the site could have been contaminated by those in the past. We have seen some sites with contamination issues where buildings were built on unsuitable ground, which has caused subsidence and health and safety issues, which has caused the school to have to hire porta cabins to move school occupants away from those particular building. Finally, really, I would just mention inquiries. So we can raise commercial property inquiries as part of a due diligence exercise. They're useful for establishing practical risks. So is there a dispute with a neighbour on the site? It will also tell you about recent works to the site. And it will also tell you about whether there's been any boundary issues. So these are all good practical things which will come out of the questionnaire which an occupier of that site, which would be an exiting trust or a school itself, would be able to tell you. I think that's it now from me in terms of property DD, so I'm going to hand over to Alistair.
Thanks, Robin. I'm just going to sum up, really. You've heard lots of good key messages about the detail and the benefits of due diligence, so I'm just going to try and draw all that together. Talk about the management of risk a bit more generally and how DD sits within that. So as many speakers have noted earlier, trustees' duties really are ultimately to safeguard the long-term sustainability and viability of the trust, and they therefore have an obligation to manage risk and to protect assets. So trustee responsibility with regard to risk generally, therefore, is you are responsible for all risks, financial, non-financial, in whatever form they may take. So those who've tuned into previous webinars with me will know my two key questions, which I'm not ashamed at all to repeat again. Do I know the risks faced by my organisation is the first key question for trustees. And it's an important and, how or where am I assured that those risks are adequately mitigated? Where is my evidence? So clearly merger is a key risk in itself, and it's your responsibility to be aware of and to safely guard the transition through. But it also presents a whole series of new risks, as many of the speakers have talked about. So I guess that extends my two key questions to cover being aware of risks in the other trust that you are considering joining with as well. So how am I aware of those risks? And equally, how am I assured? Where do I get my assurance that those risks are adequately preempted and mitigated? So this includes being assured that everything is in place for the transition itself to go as smoothly as possible, but also when it's completed, that you have assurance that there's nothing waiting hidden in the sand to bite you post-merger. We've had a number of examples of those from earlier speakers. So in other words, has everything that everyone else has said earlier, including all their war stories, been properly preempted and mitigated to the best of your ability? Well, actually, the question is, how do you really know that? Where's your evidence, your comfort or your assurance that tells you that you really know, instead of you just think, that all the risks have been firstly identified and secondly properly addressed and mitigated? So you need to be clear you've got enough assurance to address those obvious risks. One clear way is to be sure you've got sufficient coverage and scope from due diligence. There's a number of different flavours of due diligence, and we talked about some. There is a cost to due diligence, but I think, as the points made earlier say, it's a cost benefit. You pay a little bit to then not receive a large cost or a surprise in the future. So our advice, quite understandably, is really to consider the full scope of due diligence that's available to you and make sure that you've properly assessed that. Where you choose not to have full scope due diligence, you still need to satisfy those two key questions. So you need to be clear where else you're going to get that assurance regarding the risks that would ultimately have been covered by the DD. But, and there's a big but here as well, you also need to maintain your ongoing assurances regarding business as usual. You're ultimately also running a school, running a trust. Merger can take up a significant amount of senior leadership time and indeed trustee time, especially to do thoroughly enough to stop those issues derailing or hindering the process. You really need reassurance that plans are properly in place, supported by on-the-ground capacity and capability to maintain the same level of day-to-day control and monitoring over normal trust activities that you've always had, whilst also driving through the merger successfully. Effectively, one already busy day job can quite often become two for a senior leadership team member, in which case you need to be clear how everything else is okay, how the wheels are not going to come off the trust normally whilst you concentrate on the merger. So the role of the audit committee in all of this is really key. As the first point or the first scrutineer ahead of and to inform the board of both these risks, but also the assurances that they are properly mitigated. So all due diligence reports should really come through to the audit committee for a first detailed review before going to the board. Generally, the skill sets on committees are far more used to seeing and challenging that sort of thing, and therefore can tease out, challenge, debate, understand, and then articulate those risks and related assurances to the board. However, smaller trusts, especially with a combined finance or audit committee, may not have the skills or the broad range of skills on that committee to properly understand and scrutinise and ensure that there is a proper response from the trust or the senior leadership team to any points arising from the DD reports. If that's the case in your trust, then you will need to be clear how you're going to properly address this. One way is to make sure that the providers of that DD report, be they lawyers or auditors, and we do love to speak in lawyer or auditor speak, need to make sure that we are conveying our points to you clearly, properly, and succinctly enough that you are able to understand and challenge, and then further upwards articulate the key risks that we're highlighting. Equally, committee members must be able to ask for further explanation or clarification if you feel that you need it, and don't be afraid to do that. This is a really important area. So if there are potential risks that you don't fully understand or need a bit more explanation, you do need a full appreciation of them and their potential impact to be able to brief the board. So keep asking those professional advisors to explain the points and just to bottom out real impact. So in summary, there's quite a lot going on with a merger, which naturally increases risk generally, not least for the merger itself. As always, you need to maintain visibility over all of your risks and their related assurances, my two key questions. And I appreciate that this is very easy to say, but often much harder to do in practice. At that point, it's probably a good time that I hand back to Pam to kick off our Q&A session, which no doubt will pick up some of these points.
Thank you very much, Alistair. So many thanks to all the speakers. There's been a huge amount of content in there, a lot of it quite technical. No real apologies for that, to be honest. It is very technical, doing due diligence. And falls to me as chair to now try and navigate my way through some of these questions. We've had some really good questions coming in, so thank you all for that. I am going to read the questions out. Partly for the benefit of a couple of the speakers who, due to technical issues this morning, as you know, every webinar has a bit of a technical glitch, doesn't it? They can't all see the questions, so I am going to read them out to help the speakers. So yeah, I'll just make a start. So the first question, I think, Alistair, is probably no, sorry, this is going to Matthew. So in terms of TUPE and authority for making employment and payroll decisions, how are we able to mitigate challenges around significant changes being made, given there is no entity to go back to as it will have transferred in? So over to you, Matthew.
Thank you. Sorry, you glitched a little bit in the middle of that. So, but yes, essentially, if we're looking at a transfer or a conversion, the responsibility for employment before the date of joining the new trust sits with the then current employer. There is nothing that can be done to force them to do any particular action, as the trust who is waiting in the wings for that school to join. You will take responsibility for the outcomes of whatever decision is made there. So particularly with employment, it's about not only that initial due diligence exercise, but it's working with the outgoing employer to manage and mitigate any outcomes of that. What you've identified in the question, which is absolutely right, which I think I touched on, was the difference between say a conversion where you have an entity remaining afterwards that can not only indemnify you but take responsibility for the actions that they did, and an academy trust who, after the transfer, will essentially cease to be in place. So again, it comes back to you will take responsibility, and I think sort of sweeping up this answer, this question. Sorry to jump into this, Pam. on top of another question that was asked about redundancy payments and who would be responsible for redundancy payments in a conversion. If you're dealing with a redundancy payment, a redundancy that happens before the conversion, then you have the local authority or the governing body who indemnify you for the costs of that redundancy. You could still be claimed against directly by the employer, but by the employee, sorry, but you will have the local authority there to make you good. If the redundancy happens after the conversion, then that is the Academy Trust responsibility. There is no one else there to help. However, if it's a sponsored conversion, then there is an optional clause in the funding agreement which can be included, which talks about how you can apply to the Secretary of State, the DfE, for financial assistance in relation to those redundancies. And the Secretary of State can cover those costs, can cover some or all of those costs for up to 2 years. That is a discretionary power, so early discussions and negotiations with the DfE are advised. If it's a transfer, then those redundancy costs will effectively, at the end of the day, sit with the incoming trust. There is no one else there who you can go to recover those costs. So again, without labouring the point, it's about doing as much due diligence as possible. It's about looking and working with the previous employer before, so that it's not just a, come on the day and you start to uncover what you've taken on at that point. Get in there early, start discussing, start negotiating, and understand whether there is going to be anyone there to take or shoulder some of that financial burden, or whether it's all going to sit on your shoulders.
That's great. Very full answer there. Thank you very much, Matthew. So looking now at a question from Lorna. So she's put the question: how does BF view the release of the Academy's Trust Handbook, so the new version, and the focus covering a much wider remit? Will the audit process be changing? So I'm assuming you're talking about due diligence audit process here. So I think probably this is one for you, Alistair, if I can pass it on over to you.
Yes, thanks, Pam. I think that my message is still that not much has changed with respect to the responsibility and requirement for due diligence. So the now better named Academy Trust Handbook rather than the Financial Handbook, really the title says it all, that it's just a re-emphasising that risk is there in all forms, not just financial. And actually what we've been talking about is, to take Lord Agnew's point from letters that he wrote just before passing over, that risk is there for you to maintain proper visibility over and to get assurance over, and due diligence is the way that you do that. So as long as you're already doing that properly and have approached it with that view in mind, that it's about uncovering all the risk and preempting to the best of your ability, I don't think there's anything fundamental in the new trust handbook that amends that. It certainly doesn't mean that you can do it any differently or reduce it. I think you still need that assurance that you've covered all the key risks, and DD is by far the best way to do that.
That's great. Thanks for that, Alistair. So next question is around gag pooling. Very topical. Lots of people talking about gag pooling at the moment in the sector. So the question is, if gag pooling becomes more prevalent, how are we able to understand reserves, etc., applicable to a school if being rebrokered? Now, is an interesting one. I think there's a bit of a legal element here. So what I'm going to do here is pass it over to Chloe, because I think this is something that we are beginning to see more and more as trusts take on new schools, but also as trusts separate. So over to you, Chloe. I think you might be on mute at the moment before you start speaking. Yeah. No, you're on mute still. No, struggling with that.
Yeah.
There we go.
Can you hear me now?
Yes.
Apologies,
yes.
it's getting stuck. So you can hear me now?
Yes, we can.
Yes. So sorry. Right. So so presumably the school is coming out of a mat if you're talking about gag pooling. So when you're talking about gag, we need to think about the charity law principles. And just thinking fundamentally, the GAG in itself, in any context, is always a restricted fund because the funding agreement determines how GAG must be spent. In a MAT context, the funding agreement allows for the GAG to be applied across the academies in the group, and the GAG pooling provisions enforce that. So in that scenario, you would have reserves that might originate from one school, but they've gone into this general pot. So if that school's then coming out, at that point, from a charity law point of view, there's actually no clear answer, which potentially is a good thing or a bad thing. It means it's up for negotiation. So if it's a really brokerage situation, hopefully you're in a strong position to say that funds, a proportion of the funds should come over. If you're taking on historic liabilities relating to that school, that's an even stronger case that money should come over. And as to how you work that out, I mean, we've seen it whereby you apply a sort of a pro rata calculation, potentially based on pupil numbers, based on the census or something like that. I don't know if Pam, if you've seen any other formulas specifically applied. I just want to mention though, if you are taking on a school from a SAT and that school has reserves or a surplus coming over, that technically that is a restricted fund, and once in the hands of the MAT, it should be ring fenced for the school that it came from, not to be generally applied. Future income coming into the MAT it related to that school would then be available for GAG pooling. Hopefully that answers the question.
Yeah, and thanks, Chloe. Just to pick up on that point of what we've seen, I think what we've seen across our client base really today is when a school is leaving a MAT that has been GAG pooling, it's usually a distressed transfer, and typically they don't have any reserves. So actually the question of what should they take with them isn't actually in point most of the time. It's more about the liabilities and whether you're going to take on any of the potential loss that would have been attributed to that school. So that tends to be what we see, and negotiations around who keeps the loss or who takes the loss. So that tends to be what we've seen so far. On to a question now, I think for Phil, which is about from Jeff, talking about due diligence, which sometimes seems more for the trust than for the joining school. If a school is considering joining a number of trusts, how can they be satisfied they are looking at a good trust without huge costs? So I think over to you, Phil, for that one.
Thank you. Yeah, so I think generally probably the bulk of our work is for the trust on the joining school, but we do a lot of due diligence for that school that is looking to join the MAT. So it is really key that is done. Obviously, if you're looking at a number of schools, there is a cost implication to doing a full due diligence exercise. So there has to be some form of shortlisting approach that is done up front. I think before we get into a full DD scope, sometimes we do a short form due diligence, high level review to identify any major issues up front, and that gives the board a bit of a view on what's going on. And then once a decision is made as to which trust to go with, a much fuller due diligence exercise can be undertaken. So I think in this scenario it is really doing as much shortlisting yourselves as you can to identify that core group of trusts you want to join, and that really mitigates the cost implication.
Yeah, thanks, Phil. And there may also be perhaps an answer from our colleagues at VW. I don't know whether Matthew might have a view on that as well. You know, at what point do you start incurring costs if you are effectively going through perhaps a beauty parade, which I think is really what the question's talking about. You know, which trust do you want to join? Have you got any advice for the attendees on, you know, at what point do they start incurring costs if they're talking to a number of trusts?
I would suggest that the first part to do, which costs absolutely nothing, is to start talking to other schools. There will be other schools within that multi-academy trust, and make contact with those schools at various different levels, not just at the head teacher levels, but at a teacher level as well, at an estates level, and find out what happens in practice. There will be legal and financial questions that come later on, that you can go to look at. You can review accounts, you can review documentation, you can understand what IT systems they have in place and so on. But the no cost option to start with is to start talking to your counterparts in those schools to find out what the reality is of working with those trusts. It's the same as when you're looking for a new job. You can listen to what the employer tells you about what a great company it is to work for, what a great academy trust it is to be part of, but it's only when you actually speak to the people on a day-to-day basis who are involved who say either yes, it's great, they live their culture and we get all the support and all the backing we ever would want, versus those who say, well, they talk a good game, but actually I've been waiting 6 months for someone to come in and fix the IT system. And I think, before getting into the real technical stuff of legal and financial, talk to people on the ground at no cost to find out what kind of organisation it is and whether it's one that you would be happy joining and one that your pupils and your parents and your teachers would be happy being part of.
Yeah, that's great. Thank you for that, Matthew. I think actually the next question might be coming your way as well, because it's talking about more about liabilities on transfer. So the question is, where large issues or financial risks are uncovered in due diligence and looking to local authority to rectify before conversion, can you have a formal understanding or agreement that you are moving towards conversion or the school joining your trust at some future point?
How do I put this succinctly? Not really. Until you actually sign the documentation, there is nothing that's binding on you or the school or the local authority or, crucially, the Department for Education to actually make the conversion transfer happen. And until that point, you as an academy trust or you as a school don't want to be in any sense in a position where you can be legally bounced into doing that. This is the reason why all this due diligence exercise goes on, is because until you actually sign on the dotted line, you do have that ability to pull back. And as has been mentioned before, trustees have a legal duty as charitable trustees and company directors, as well as a duty to their existing schools not to expose yourself to too much risk or too much liability when taking on new schools. When you are comfortable and when everything has been agreed, the I's dotted, the T's crossed, you sign on the dotted line for that funding agreement and the transfer agreement. That is when it becomes legally binding. Up until that point, nothing becomes legally binding. That's not to say you can't have memorandums of understanding, heads of terms, which you enter into, which set out absolutely your intention that you are looking to move towards a conversion or a transfer. We are aiming for the 1st of January 2022. As things stand, we see nothing that will prevent us from reaching 1st of January 2022. But, and there will always be that but, which is where the lawyer looks at and is most interested, that will not be legally binding. And therefore, absolutely have whatever memorandums or heads of terms or letters of comfort you want to have. But unless until something is legally binding, then as a cynical lawyer looking at it, I look at it and go, well, it's all very nice. It's very pretty. It sets out nice words and so on. But there's nothing there that actually enables someone to rely on it. So yeah. From my perspective, once you sign on the dotted line of a funding agreement or transfer agreement, that's when it becomes real. Up until that point, you have to have the ability to pull out if you uncover some horrific financial liability which no one else is willing to take.
Great, that's a really good answer there. Thank you for that, Matthew. So we've now got a question about school fields, which I think probably applies in a lot of instances. So I think this one's coming to you, Robin. We are concerned about members of the public using a school field. That's an academy we're taking on. How do we establish more about this?
Thanks, Pam. I think the starting point would be to ask the school if they've got any information about how long the walkers have been doing it, whether there's a particular route, and to find out a bit more information, really. In terms of the searches you can carry out, a local authority search would tell you if that site if the playing field has a public footpath on it, which will obviously give you a clue as to whether the walkers have a right to walk across it. It will also tell you if the land is commons land, and commons land is a bit of a quirky thing where people of a town or a village have a right to use that area of land as a common. So to do things you would do on a common, which includes walking, playing some village type games, etc. So as well as that, I suppose you could look at the title to the property, because it might be that is expressed to be subject to an express right of way, again, which may not be a public footpath, but could be a right of way which walkers are allowed to walk across.
That's great, thanks, Robin. And actually, I think the next question may be coming your way as well, because it's all to do with leaseholds. So if an academy is occupying a site by leasehold, not in the model form, and there are not many years left on the lease, what scope is there to negotiate? Are private landowners under any obligation to negotiate? Can a trust pay the private landowner for a more favourable lease arrangement?
Dealing with the negotiation point first, there is opportunity to negotiate, especially if the lease is coming to an end. Whether there is an obligation to negotiate on the landowner it depends really on whether the lease is contracted out of the Landlord and Tenant Act 1954, which gives a tenant a right to remain in that property. In terms of context, most leases from local authorities for academy sites are contracted out, as is the model lease. So you need to establish whether it's contracted out, and that will give you a background to those negotiations, because if you're occupying that site and the lease is protected, then you'll have a right to remain, which means it's more difficult for the landowner to get you off that land at the end of the term. In terms of paying for a better lease, you can of course agree new terms which could include a rent, but you will need to apply for consent to enter into that lease anyway. So you will need to take some valuation advice to make sure that any rent or payments you are being asked to pay or you agree to pay are a fair reflection of market value and are not a way off market terms, because they just won't get through the consent procedure, I don't think.
Okay, lovely. Thanks for that, Robin. I think next question coming to you, Chloe, because this seems to be a little bit more about policy. So if we are a SAT, do we need to be looking around to jump before we are pushed?
No, not necessarily, and we're not interested in sort of scaring SATs into jumping into things that they might not otherwise do. I think we'll likely see more scrutiny of SATs, so I think those that are higher performing might escape some of that scrutiny, but certainly the underperforming ones, we might see an increase in numbers of sort of termination warning notices to improve. It might be that there are some capital allocation decisions that are made that don't favour the SATs. So, for example, so schools and SATs will necessarily need to apply for SIF funding. So we could see that criteria being sort of slightly manipulated to so that it doesn't favour those in a SAT scenario. If you are in a SAT, obviously you do have options open to you. So it's not just simply a question of, do I join a MAT? It might be that you yourself become a MAT and that you take schools into the fold as well. That's an option. I think practically speaking, I'd recommend that you're making strong relationships with the trusts in your area. I suspect you're doing that already, but those sort of relationships will help inform those strategic discussions then that might come at some point as to whether or not the MAT is the right option for the trust.
Great, thanks for that, Chloe. So I think this one's back to Robin again. If you are doing a comprehensive site survey, is there any benefit in also doing property searches as part of the DD process?
Thanks, Pam. It depends really on what your comprehensive site survey covers. Property, I mean, they usually are more focused on buildings rather than title issues, local authority search results, and drainage searches and environmental searches. They won't necessarily give you that kind of information, and so I guess the starting point would be to establish what the scope of that comprehensive site survey covers, and then have a look at what the difference is between what the results of a full set of searches would tell you, and then make the decision based on that.
Okay, lovely, thanks. I think, again, this is a bit more of a policy question, so back to Chloe for this one. What are your thoughts on a soft federation?
They can be a little bit tricky. So I think with different forms of collaboration, I think there's clearly a continuum. For those who might not have heard the term soft federation, it's actually old lingo in the legislation. It's where two maintained schools establish a joint committee to oversee certain functions, but the governing bodies stay as separate bodies. It's a bit different to a hard federation that we see in the maintained sector, where that's one governing body overseeing two or potentially more schools. I think one of the issues with a soft federation is ultimately you're still two separate bodies, and so obviously the two schools can increase their working by having that joint committee, but actually the barriers of two different bodies can cause you problems, because you will necessarily have a different employer for people in the schools. That means that it's not easy for an individual to work across the two schools. You need contracts for services between the two of them, so it's more complicated, and the joint committee arrangements can add a complexity to the governance arrangements. You might find it more straightforward to simply work with another school through a contract for services, but you know, there have been positive examples, I think, that we've seen as well. So
great, thank you. Another property one, so going back to Robin for this one. So you've spoken about the timing of property due diligence. How long should we allow for searches to come back once submitted?
I think a good rule of thumb really to encompass the whole suite of services searches would be around 4 to 6 weeks, but that's, you know, we're asking local authorities to do searches, and they do them sometimes a bit quicker, and sometimes they do take a bit longer, but I would say a good guide is 4 to 6 weeks on that.
Okay, so that's quite a nice straightforward answer there. This may not be quite such a straightforward answer. I think we're coming to Matthew for the question about BSF schools. So do you have any advice or thoughts where a single academy is looking to transfer to a MAT, but the SAT is a BSF school whose property is looked after by an external organisation?
Thank you, Pam. Yeah, 2 words: tread carefully. Yes, it is a complex one. It is complicated. I have to hold my hand up. In previous careers, going back many years, I was involved in PFI and BSF schemes, so knowing them intimately, know the issues involved. And essentially, what we've got here is a situation where, again, apologies, it's going to come as a bit of a stuck needle, but due diligence is absolutely key. Usually, and I expect here we're looking at some sort of PFI arrangement rather than just straightforward BSF, but there will be an external organisation that has the management and control of the school to a greater or lesser degree, depending on how the project was set up. One key point to note is that these projects usually ran for 25 years. We are getting to the end of them, or we're coming over the next decade where most of them will end. So the first question is, how long does this arrangement continue? But after that, it will be looking into exactly what is covered and what it means in terms of the flexibility the multi-academy trust will have with that school moving forward. So the practical issues are, does the PFI contractor have responsibility for catering? Does the PFI contractor have responsibility for ICT? Will this school therefore be on a very different set of systems to all of the other schools within the multi-academy trust? If a teacher can pick up a laptop and move from school to school and seamlessly join in and integrate into the IT system of the schools because the MAT has them all set up on the same system, it's going to make it very difficult if one of the schools in that trust has a completely different system that doesn't allow for that. Does the MAT have an external partner it works with to let facilities, sports pitches and so on out of hours? Does it have systems and organizations in place that it works with that it won't be able to do with this new school? There is nothing that prevents a PFI or a BSF school joining a multi-academy trust. Brackets, there are significant extra legal hurdles when it happens, but there is nothing to stop it happening in theory. The reality is you need to really understand and consider the difference that's going to be in place with that school compared with the other schools within the trust, and make sure that you understand exactly what that means, and if you are going to proceed, that you're comfortable and happy to work forward on that basis.
That's great. Thank you there, Matthew. So there's actually a question just come in from Sue, which I think potentially is another one for you, Matthew. So I'll read it out because it's just come in while you've been speaking, but it's about hostile transfers. So we've got the question, what is the best option to take in terms of covering off liabilities in the CTA in a hostile transfer? And I think we see quite a few of these at the moment. So the outgoing trust is resisting our efforts to insist on liabilities and warranties being covered. How hard can we push?
Thanks. Yes, thanks for that. I'm just going to try and pull it back up again. So, right, sorry, I've lost it now. But yes, if the forced rebrokerage and the forced conversion is from a single academy trust, where the single academy trust will cease to exist after the transfer, then in reality there is little you can do to just get any protection from them. And I've mentioned before. So what the more interesting situation is where you are dealing with a forced rebrokerage out of an existing multi-academy trust that will continue to remain in place and continue to have schools after the event. And I've worked on several from a rather large, rather well-known multi-academy trust that a few years ago had some issues and had some forced rebrokerages from it. And essentially it is a negotiation game of hardball. And it is a situation that there is no tried and tested path for it. You are asking for warranties and indemnities for what has happened during the period of time that they have had and been responsible for maintaining the school. And they are absolutely within their rights to turn around and say, no, we're not giving you any warranties. You take it as it is. And, the risk sits with you. If having done the due diligence, you're not prepared to accept that, then you cannot take on that school. And in reality, what we deal with here is a situation where what is the pressure on that outgoing academy trust to rebroker to you? And if you turn around to the RSC and say, well, we're not taking it on because they're refusing to take responsibility for what happened on their watch, and until that is resolved, we are not taking it, then significant pressure can be applied at RSC level and at DFE level on that trust to bring them back to the table and to get them to act sensibly. From their perspective, it is in their best interest to try and hive off all the responsibility and all the liability onto you. But remember, at the end of the day, nobody can force you to take on a school. And if you are feeling as though you're not getting what you want and what you need in order to take on that school, you simply put the shutters up and say, until this is resolved, we are not taking this forward. And that realistically is the only way that you can pull someone to the table that is unwilling to sit there.
That's great. And I'm sure a lot of people would be interested in hearing your answer to that, Matthew. And I'm going to put you on the spot again, if I may, because there's actually been another really good question just come in, which I think, again, is something I'll read it out because I know you haven't had the benefit of looking at it yourself. So, is there any legal recourse for a MAT who has not received the balance of the working capital items, so prepayments, accruals, and the money that's been promised on transfer from the trust who the school went to from a rebrokerage? So basically, if you're waiting for your money to come across and it's not coming, you know, what recourse have you got for that to chase it?
What you should have is a properly drafted transfer agreement, which includes the mechanism for payment of such sums. And essentially, it sounds as though what you're dealing with here is someone that is not paying what they are contractually obliged to do. And at the end of the day, if it comes down to it, it's the same as any debt from someone who owes you something where they're unwilling to pay for it. You have the legal resource of litigation to recover that money. Now, we are assuming here that there is an entity, the trust who the school went, so the outgoing trust. And again, sorry to harp on, if that was a single academy trust, then there is nothing there, but presumably everything came over to you. So if we're dealing here with a rebrokerage out of a continuing multi-academy trust, they are a legal entity, they have assets, so you are able to take legal action against them. You do have to weigh up the costs of that action and the practicality of whether it is the right thing to do. And again, there are softer ways of dealing with it. You know, you talk to DFE, talk to the ESFA, talk to the RSC, because if you have a contractual obligation and an academy trust is not living up to it, the last thing anyone wants is for two educational institutions to waste money on lawyers' fees and court fees trying to chase a debt which is clearly owed from one party to the other. And it certainly would not put a trust in DFE's good books if they are reneging on clear contractual responsibilities to pay money to another academy trust, forcing money to be wasted in that way.
Yes, thank you. And sadly, we do see this very occasionally. So I think that's sound advice. You know, research all possibilities before spending any money, significant money, chasing it down. So I think that's good advice. Yeah. So I think we're coming close to the end of the webinar now. We've got a couple of questions that we haven't managed to get round to answering. We will do that. We will answer all the questions. So that we'll publish that. All attendees will get the written answers to the questions. So really just leaves me to thank the presenters. I think there's been some really good content. Also, thank you all for your questions. There really has been some good questions coming in today. Just like to point you to our website. So we've got a big, there's huge content on the Bishop Fleming website, as there is on the VWV education page as well. But if you do have any questions following this, we'd love to hear from you. There will be a recording available of this webinar. And for those of you on the webinar who are clients of Bishop Fleming, we look forward to seeing you at our client webinar in a couple of weeks' time. And until then, just to say thank you very much and thank you for attending.